When we talk about the long-term mindset of millionaires, we are referring to one of the fundamental pillars that sets them apart from ordinary investors. Most people enter the world of investing with one goal in mind: to make a quick buck. This short-term thinking may seem attractive, but it's the exact opposite of what millionaires do. Millionaires understand that real growth comes over time. They know that the magic of compound interest only works in favor of those with patience. Their focus is not on earning a little now, but on building a solid and sustainable fortune over the decades. They prefer to invest in assets that, although they may be volatile in the short term, have great growth potential in the long term. This can include shares in companies with strong fundamentals, real estate in strategic locations, or even their own businesses that can appreciate in value over the years. Another aspect of the long-term mindset of millionaires is the understanding that the financial market is cyclical. They know that there will be ups and downs, and they don't allow themselves to be shaken by temporary falls. While the average investor may panic and sell on the downturn, millionaires often see these falls as opportunities to buy more of an asset that they believe has intrinsic value. They know that by holding onto their investments during downturns, they can reap significant rewards when the market rises again. This long-term thinking is also reflected in the way millionaires treat their businesses and assets. They are always thinking about how what they are doing today will affect their assets in 10, 20, or even 30 years' time. For example, rather than simply seeking immediate profit, they focus on building a solid foundation for future growth. This might mean reinvesting profits rather than spending, or expanding a business strategically rather than pursuing rapid, unsustainable growth. The long-term mindset is not just about patience, it's also about discipline. Maintaining an investment for years, or even decades, requires ongoing commitment and the ability to resist the temptation to tinker with your assets when things look uncertain. Millionaires know that if they want to reap the rewards, they need to be willing to weather the storms of the market. This also means not following the crowd. While many may be rushing to invest in the latest fad or the asset of the moment, millionaires remain true to their principles and their long-term strategy. But don't think that this mentality comes out of nowhere. It is often shaped by years of experience and learning. Millionaires, in many cases, have gone through investment phases where they made mistakes, learned from them, and became more resilient. They know that financial success is a marathon, not a 100-meter sprint. It's this vision that keeps them focused on their long-term goals, even when the going gets tough. What's more, millionaires don't see their long-term investments as mere numbers in a bank account. They see them as vehicles for achieving something greater, be it financial freedom, a family legacy, or the chance to contribute to important causes. This greater purpose gives meaning to their efforts and motivates them to maintain their discipline and patience. In short, while the average investor may be looking for quick wins, millionaires are playing a completely different game. They know that patience, discipline, and a long-term vision are the true paths to lasting wealth. They are willing to sacrifice immediate pleasure for much greater rewards in the future. And it is this mindset that ultimately puts them on a completely different level when it comes to financial success. Intelligent diversification is one of the best-kept secrets among millionaires when it comes to investing. Many ordinary investors understand the basic concept of diversification, distributing investments between different assets to reduce risk, but few know how to apply it in a truly effective way. Millionaires, on the other hand, take diversification to another level, using it not only as a form of protection, but also as a strategy to maximize the return on their investments. First, it's essential to understand that diversification for millionaires goes far beyond simply buying a mix of shares, bonds, and real estate. They know that in order to really protect and grow their wealth, they need to diversify across different asset classes, sectors, geographical regions, and even different investment strategies. This means that instead of putting all their resources into technology stocks, for example, they can invest in a combination of sectors such as energy, health, consumer, and finance, each in different markets around the world. This approach helps ensure that even if one sector or region struggles, other parts of their portfolio can continue to grow. In addition, millionaires often diversify their investments between assets that react in the opposite way to economic conditions. They know that during a recession, some assets, such as real estate or bonds, can behave steadily, while others, such as stocks, can be more volatile. By holding a mix of assets that behave differently under the same market conditions, they can protect their portfolio against large losses and, at the same time, be ready to take advantage of opportunities when they arise. Another facet of intelligent diversification is the use of alternative investments. Many millionaires include assets such as hedge funds, private equity, commodities, art, and even cryptocurrencies in their portfolios. These types of investments, which are often out of reach for the average investor, can offer substantial returns, especially in times of volatility in traditional markets. However, they also require a higher level of knowledge and access, something that millionaires achieve through their networks and specialized advisors. A crucial point that sets millionaires' diversification apart is the understanding that diversifying doesn't mean diluting their investments to the point of compromising return potential. They know that there is a fine line between diversification and pulverization. Instead of investing small amounts in dozens of different assets without a strategy, millionaires focus on carefully selecting the assets they believe have the greatest growth potential or those that best protect their wealth. This allows them to maintain a portfolio that is diversified enough to mitigate risks, but still focused enough to generate significant returns. Another fundamental aspect is that millionaires' diversification is not static, it evolves over time. They constantly monitor the performance of their investments and market conditions, making adjustments as necessary. If a specific sector or asset begins to show signs of saturation or excessive risk, they don't hesitate to reallocate their resources to areas with better prospects. This flexibility and proactivity allows them to adapt quickly to changes and keep their portfolio in line with their long-term objectives. Intelligent diversification also involves protecting against non-financial risks, such as political risks, regulatory changes, and global crises. Millionaires know that financial markets are impacted by a multitude of external factors, many of which are beyond their control. They therefore make sure that their portfolio can withstand these shocks. This may include allocating part of their resources to foreign currencies, gold, or other assets that tend to appreciate during periods of uncertainty. Finally, smart diversification requires a deep understanding that not all investments are created equal. Millionaires dedicate time and resources to thoroughly researching and understanding the assets in which they invest. They know that diversifying intelligently is not just a question of quantity, but of quality and strategy. Each investment in their portfolio serves a specific purpose, be it for growth, protection, or income generation. So while the average investor may see diversification as a simple division of resources, millionaires see it as an art. They use it to create a delicate balance between risk and return, protecting their assets while seeking growth. And it is this strategic approach that allows them not only to maintain, but also to expand their wealth, regardless of market conditions. When it comes to investing, knowledge is one of the most powerful tools that millionaires possess. But it's not just about acquiring knowledge once and considering the job done. What really sets millionaires apart from ordinary investors is their commitment to continuous learning and their relentless search for information that can improve their investment decisions. They understand that the world of business and investment is constantly evolving, and that staying ahead of the curve requires a permanent dedication to personal and professional development. For millionaires, investing in knowledge is just as important as investing in financial assets. They know that informed decisions bring the highest returns and that minimizing mistakes requires a deep understanding of where they are putting their money. That's why they are always looking for new ways to learn. This can include reading books on finance, attending advanced investment courses, or even getting mentoring from other successful investors. But millionaires' learning goes beyond theory. They also value practical knowledge, which is acquired through experience and observation. Many millionaires keep investment diaries in which they record their decisions, the results obtained, and the lessons learned. This allows them to reflect on their strategies and adjust their behavior in the future. They know that every success and every failure are valuable opportunities to learn and grow, and they use these experiences to continually refine their approaches. Another crucial aspect of continuous learning among millionaires is the recognition of the importance of surrounding themselves with even smarter and more experienced people. They know they don't have all the answers, so they seek to build networks that include experts from various fields, such as accountants, lawyers, financial advisors, and other renowned investors. These professionals not only provide valuable advice, but also offer diverse perspectives that can help millionaires see opportunities and risks that might otherwise go unnoticed. Millionaires' quest for knowledge is also driven by their ability to question and challenge their own beliefs. They are not content to blindly follow what they have heard or learned in the past. On the contrary, they are always willing to revisit and reassess their investment strategies in the light of new information or changes in economic circumstances. This prevents them from falling into the trap of overconfidence or groupthink, allowing them to maintain a clear and objective view of their finances. In addition, millionaires understand that the world is changing rapidly, especially with technological advances and transformations in the global economic landscape. For them, innovation is an integral part of investment success. This means that they always keep an eye on emerging trends, such as new technologies, demographic shifts, or regulatory changes, and are willing to adapt when necessary. This ability to anticipate and respond to change gives them a significant competitive advantage, allowing them to capture opportunities before the wider market realizes their value. But continuous learning is not just limited to the technical mastery of investments. Millionaires also invest in their personal growth, developing skills such as discipline, emotional control, and resilience. They know that success in investments depends not only on what you know, but also on how you react to different situations. That's why they dedicate time to self-knowledge and improving their mindset, to ensure that they are always ready to make rational decisions, even in times of pressure. It's important to note that this commitment to continuous learning is something that millionaires incorporate into their daily routines. For them, the process of learning never ends, it's a constant journey. They make education a priority, dedicating regular time to studying new markets, analyzing past investments, and looking for new opportunities. This creates a knowledge base that becomes an irreplaceable competitive advantage. In short, what millionaires know about investing that many others don't is that knowledge is never static. They understand that the investment market is dynamic and that long-term success depends on a constant ability to adapt and learn. This commitment to continuous development enables them to make more informed decisions, avoid common pitfalls, and identify opportunities that are often invisible to those who are not equally committed to learning. And it's this edge that often puts them way ahead in the investment game. When it comes to patience and emotional control, few attributes are as fundamental to investment success as these. Millionaires understand that building and maintaining wealth requires much more than just choosing the right investments. It also requires the ability to resist market pressures and stand firm in your convictions, even when everything around you seems to be falling apart. This combination of patience and emotional control is what allows them to navigate market storms and come out even stronger. First, let's talk about patience. Investing is a long-term game, and millionaires know this better than anyone. They understand that great returns don't come overnight and that it takes time for investments to mature and reach their true potential. Unlike the average investor, who often gets carried away by the temptation to make a quick profit, millionaires take a long-term view and are willing to wait as long as it takes for their investments to appreciate in value. They know that real wealth is built up over years, or even decades, and that patience is the key to turning modest investments into considerable fortunes. But patience alone is not enough. Emotional control plays an equally crucial role. Financial markets are notoriously volatile, with fluctuations that can test even the most experienced investors. During moments of crisis, such as recessions or abrupt market crashes, many investors panic and make impulsive decisions, such as selling their assets at low prices to avoid greater losses. Millionaires, however, understand that these are the moments when emotional control makes all the difference. Instead of letting fear get the better of them, they stay calm, analyze the situation rationally, and make decisions based on their long-term strategy, not on the emotions of the moment. This emotional control is also reflected in millionaires' ability to ignore market noise. They know that news and rumors can influence the markets significantly, but they don't always reflect reality or the intrinsic value of their investments. That's why they don't let themselves be affected by the alarmist headlines or short-term predictions that often dominate the financial news. Instead, they remain focused on their research and analysis, relying on their studies and strategies to guide their decisions. This ability to filter out what is relevant from what is not allows them to avoid the common mistakes that result from decisions made in the heat of the moment. Another manifestation of emotional control is the ability to resist social pressure and market trends. In many cases, ordinary investors follow the crowd, buying assets that are on the rise for fear of missing out on opportunities. This often leads to financial bubbles, where the price of an asset becomes completely detached from its real value. Millionaires, on the other hand, have the discipline to avoid such herd behavior. They know that what is popular is not always what is most profitable, and that blindly following trends can be dangerous. By maintaining a clear vision of their goals and a well-defined strategy, they are able to resist the temptation to enter into overvalued investments and remain true to their convictions. In addition, millionaires understand the importance of managing their expectations. They don't expect every investment to be successful, nor do they expect the market to go up indefinitely. Instead, they are prepared to face losses and know that they are part of the investment process. This mindset helps them stay calm during downturns and not make rash decisions that could damage their portfolios in the long run. By accepting that failure is part of the path to success, they are able to maintain their resilience and continue investing even when things don't go according to plan. It's also important to note that millionaires' patience and emotional control are often the result of years of experience and learning. Many have experienced financial crises, substantial losses, and unexpected challenges along the way. These experiences have taught them the importance of keeping a cool head and not letting themselves be shaken by the inevitable ups and downs of the market. They know that, over time, the market tends to reward those who remain steadfast, and that the greatest opportunities often arise precisely at times of greatest uncertainty. Finally, patience and emotional control also allow millionaires to take advantage of the power of compound interest. By holding onto their investments for long periods, they allow the returns on their assets to accumulate and grow exponentially. This is one of the reasons why patience is so highly valued. It is what allows a modest initial investment to turn into a great fortune over time. In short, millionaires know that the key to success in investments lies not only in choosing the right assets, but also in the ability to remain calm and patient in the midst of uncertainty. They understand that the market is unpredictable, but that emotional discipline is what allows them to get through the difficulties and achieve their long-term goals. And it is this combination of patience and emotional control that ultimately separates successful investors from those who fall by the wayside. When it comes to networking, many underestimate how much of a game changer it can be in an investor's career. For millionaires, networking is not just a way of socializing or making contacts. It is an essential strategic tool that can open doors to unique opportunities, offer access to insider information, and provide the support needed to navigate the complex worlds of business and investment. This type of relationship is built deliberately and with a clear purpose to add value to your portfolio and ultimately increase your wealth. One of the reasons why networking is so crucial for millionaires is that it gives them access to information that most people simply don't have. In competitive markets, where information is power, being well connected can make all the difference. Millionaires know that the best investment opportunities often never reach the general public. They are shared first among those who have the right contacts, whether in the form of private offers, startup opportunities, or even information about major changes in the market that have not yet been widely publicized. This inside information can be what allows them to get in early on a promising investment or avoid an impending financial disaster. In addition to access to information, networking offers millionaires the opportunity to learn directly from other successful investors. They know that no matter how successful they are, there is always something new to learn, and that other people may have valuable experiences and perspectives that can enrich their own approach. By surrounding themselves with individuals who have already achieved success, millionaires can absorb insights into investment strategies, learn from others' mistakes, and even get advice on how to overcome specific challenges. This exchange of knowledge is one of the most valuable aspects of networking and contributes significantly to the continuous growth of their financial expertise. Networking also plays a key role in building strategic alliances. Millionaires understand that often the best way to achieve a goal is to work together with others. They establish partnerships that allow them to combine resources, share risks, and maximize returns. These alliances can take many forms, from co-investing in a real estate project to collaborating on a business venture. The key to the success of these partnerships is mutual trust and alignment of interests, something that is only possible through a solid and reliable network. Another important benefit of networking is access to mentors. Millionaires often seek guidance from people who have already walked the path they are on. These mentors can offer invaluable insight, guiding them to avoid common pitfalls, identifying opportunities that may have gone unnoticed, and providing the emotional support needed in times of uncertainty. For many millionaires, the value of a mentor is incalculable, as the wisdom acquired over years, or even decades, of experience can significantly accelerate the path to success. Networking is also about building and maintaining a reputation. Millionaires know that their reputation is one of their most valuable assets and that it can open doors that no money can. They work diligently to be seen as trustworthy, ethical, and competent. A good reputation not only attracts opportunities, but also makes other people want to do business with them. In a world where trust is essential, a strong network of contacts can be the difference between being chosen for an opportunity or being passed over. It's important to note that effective networking is not a one-way street. Millionaires know that in order to build solid relationships, they also need to be willing to give, not just receive. They look for ways to add value to their networks, whether by offering advice, sharing opportunities, or simply being a good listener. In doing so, they not only strengthen their relationships, but also create an environment where opportunities flow naturally. This reciprocity is what sustains the strongest networks and makes networking a powerful and sustainable tool. Finally, networking allows millionaires to keep up to date with market trends and changes in the global economy. They know that the world is constantly changing and that what works today may not work tomorrow. By being in contact with a diverse network of individuals, they can gain different perspectives on where the market is going and adjust their investment strategies accordingly. This ability to adapt quickly to change is what often keeps them ahead of the curve and allows them to capitalize on new trends before the rest of the market notices. In short, what millionaires know about networking that many others don't is that it's much more than just meeting people. It's about building strategic relationships that can directly influence the success of their investments. They understand that, in a world where information is power and trust is currency, being well connected can be the key to discovering unique opportunities, learning from the best, and building a solid foundation for the continued growth of their wealth. And it's this deliberate and strategic approach to networking that helps them stand out in the investment world.